Hey traders, may pips be upon you. Let's give a full breakdown of gold. I have a swing idea that I think is going to bring a lot of pips. Okay, let's get started. We're on the daily right now. I'm not going to the monthly and the weekly because I don't think it's necessary. Why? Because the only thing I'm going to get there is support and resistance levels, or really uh, uh, highs and lows, and where I think orders are going to be stacked, whether they're buying or selling, right? So we can get that thing accomplished here. We can take this one from the top. That's probably a monthly level right there. And see this here, see this, see that. See, I'm not going for every little level, okay? Because all of this is noise. All right. What you want are the major structural levels, all right, where you see swing highs and swing lows that are pretty pronounced. Now, what I ask myself is, would I see these points on a uh, a weekly chart? Would I see them on a monthly chart? All right, because after a while, these become wicks, or they just become zigzag lines when you go higher. All right, but when they're still pronounced on those higher time frame levels, then you know those are real levels. All right, so I'm looking at these levels here. What am I looking for when I look at these levels? I'm looking for contact. I'm looking for where price interacts with that line, whether it's for support, resistance, resistance over top, comes back, checks it as resistance. All right, resistance, resistance. That's what I'm talking about. The more touches it has as support and or resistance, that makes it a very strong level. The more, the stronger. You understand? Okay, good. You got it? Good. All right, I'm going to use this level here. Why? Because, this is the level. It was tested here as resistance, it was tested here as support. Here, it passes through the support and retests at in the middle here, this middle candle as resistance. Then it goes back over, and we get a tested support here. Same deal here, here. We passes through, tested as resistance, passes back over, then comes back and tested it as resistance. I like this level just a little higher right there. Boom, 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 boom. Yeah. All right. And one more I see, obviously, this one. Why? Why this one? Because you see it tested as support, 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 then resistance, resistance. Okay. Very good level indeed. All right. And that's immediately, it's the ones that are closest to price over and above that are the most relevant. Okay. So we got that accomplished. Now, what do we do? Let's take a look at the whole structure. Are we looking, we're trying to establish a bias here. All right. You see that price had a strong uptrend, right? That's a strong uptrend. All right. And then we have the correction. This is the impulse. Now we have the correction. Okay. I want you to take a good look at levels like this one. Why? Because this level is this is higher. Look at this. We're talking about higher highs, higher lows, higher highs, higher lows. All right. This is the last higher high and higher. This is the last higher low before the ultimate highest high. All right. This is pretty important. This last impulse from this higher low. So a break here, a break below this would tell me that we're no longer in an uptrend. We are in a downtrend. Well, at least that the uptrend is over. All right. Let's take a good close look at this, and we can see that this line I have here. All right, we want to see when you have a break of structure. You see this noise. All right, when you have a break of structure here, all right, it tests the structure here. All right, then it goes back up, and then it comes back down. We break that structure, come back and retest it. What you want to see on the retest is price to continue down, but that's not what happened here. All right, price stayed above. That screams of you better take a closer look at this. All right. Also, what I want you to see, this is why I'm inclined to think that price is still good to go for buys and longs, because it didn't continue down. There's still strength in here. The uptrend isn't necessarily still intact, but we don't have an established downtrend yet. You can say this here, you got a lower low, lower high, lower low, lower high, lower low, and this is the lower high. You could say that, yes, but this is corrective. Let me tell you why. Let me show you. Look at your Fibonacci. Let's go from the swing low to the swing high with the Fibonacci. Okay. And you can, oh, did I just do that? You didn't see it. All right. Swing low to swing high. You can see that price comes exactly and precisely down to the 618 golden ratio. This is the one, the most of all the Fibonacci levels. This is the most important, because when price comes down here, that is a full on retracement, and you know that once it leaves this area and starts taking out the Fibonacci levels on the way up, the 50, the 382, the 236, and the zero level, you know that price was probably going to test this high, and or break the high. But what you have is a continuation pattern. All right, impulse, correction, and impulse. Do you understand? All right. So this is what we have here. From the swing low to the swing high, we have the 618 is tested here right at this level I already picked out. All right, all the way across, which is awesome. And we have a double bottom. We have a double bottom here. Excuse me. Let's get this a little blown up. We have a double bottom here. All right, validating this level, validating the 618 golden ratio level. All right, you see it's been tested well as supply as resistance and as support, and then you come over here with a double bottom. This is in an uptrend. A double bottom in an uptrend is a great entry, is a great recipe, a great foundation for a long position. Okay, to enter for a long position. This was these longs here would have been awesome. This is going to, you would have caught the bottom of the move. All right, but I'm not into catching the bottom of the move. I'm into catching the meat of the move. All right, what do I mean by that? You don't have to be first. You don't have to be first. You just have to be profitable. Okay, here is where a proper entry for me would have been. All right, after it breaks this level of resistance. This was the candle. All right, I always say look for that bullish engulfer, look for that momentum candle after wick rejection. So what did we get here? What we got here was this level. All right, price gave you the wick rejections here. If you go down on the four hour, the 1 hour, you'll see there was a rejection here, and then you get this nice bullish candle here, the one that engulfs the other candles prior, and it's strong. It's a momentum candle. This is where I would have had my entry. Yeah, I would have got some drawdown. All right, but that's where am I going to put my doggone stop loss? Am I going to put it here? Of course not. All right, especially if I'm going for 100 pips or more. No, put it on the structure. Get a two. You're going to get at least right here. You're going to get at least a 218, a 2R trade out of this. All right, this is going to be pretty strong resistance. So when price comes up here, it's probably going to go boom and retrace. It might do a dance here, might do a double top, and then finally break through with a break and retest to test these highs. All right, so you want to keep that in mind as points of destination and TPs when you set your TPs. Now, this is where I'm gonna take I'm going to say take this trade up to this level. All right. And I would put uh, uh, Fibonacci retracements on this. Let me get this right. All right. I would put Fibonacci retracements on this to see exactly where I would put a the ultimate targets. 618 is probably a good target. I'm going to listen. It's out of this world, of course, but this is a correction. You're looking for the next impulse up, and that impulse is going to break this high. All right. This would be, you know, this would be my first and second, 27 and the 618. All right. Those would be my choices for holding price, holding the trade past this level. This is always going to be this right now is going to be my ultimate target, but I would be looking for it. And for those that want to hold it for a long term swing, you, those would be good targets because price usually finds its way after a retest, after a pullback. Excuse me. You'll see price usually hits these levels. All right, just look for that in the future. You don't have to remember I said it. Just look for it in the future. But for now, the trade at hand. All right. I'm waiting for a close. Let me get rid of this. It's a distraction. I'm waiting for a close because we missed this ultimate entry. All right. So we're looking for an entry past this level of resistance. Okay. This is a great level to look for it to. You see how many times it's already tested. So and you see this bullishness heading this way. We have another level, and I want you to make note of it. Just remember, price did a break and a retest here. Okay. We're going to look for the same here above, retest, and then take off. All right. TP1, TP2. Does that make sense? So we're looking towards, I would say, yeah, this would be my target. All right. And if you're going to do that with me, uh, I'm going to tell you where TP would look something like this here. TP wouldn't be down here. All right. Your risk to reward would be only 1.23. That'd be terrible. Put it under your structure here. All right. Safer would be down here. Why? You want to protect your stop loss. You want to have it to have. You want to have obstacles. So if price does get above this level, all right, and it does come back on you, you want it to have to deal with this support. You want it to have to deal with this support. All right. And if you have a third support, why not? All right. Understand you're going to be eating up risk to reward. So just keep that in mind. A more conservative place to put your stop loss would be here. All right. All right. This one, this one, you should be fine. This is where I'm going to put it. I will almost have a 3-to-1, a 1-to-3 risk to reward, and that ain't too bad. That ain't too bad. Yeah, yeah. But you got to wait until price breaks above here, so you have some protection on it, right? And this will give us a bunch of pips. We're talking about over 1,000, over 1,500, almost 1,600 pips. Okay. All right. This is gold now, so I'm going to remove that last digit. Just you know, just be patient with this because when it runs into these these levels here, there's going to be, price is going to go up, down, run into those levels, then come back down and retrace, pull back. Just hold what you got. Hold what you got. Set your TPs. Be patient, and we can see this thing through. Once you get your first TP, I would suggest your first TP would be uh, this is a good level here. This level right here. Yeah. Once you get past this level here, uh, and go to break even. Okay. Go to break even, collect a partial, and then set your third TP. Where was this? The first one was here. All right. The first one. Let me see something here. Let me mark them so that you'll know. First one is there. Second one should be. Ooh. Yeah. Yeah. Second one should be right here. All right. And you got your third one up at the top. You can see the labels here: 1858, 48, 1920, and 145. And the last one up there at 1956, 351. Okay. That is my trade idea. Wait until you get a daily close past this level of resistance. All right, wait until that's when you start looking for your setup, your entry. All right, let's take a take a chance on this one when it starts to form up, and I'll keep you updated. Thank you for listening. Be careful. Talk to you in the next video.